crude really is on the boil. Brent crude prices have gained for the third consecutive day in a row. It is now trading near that $81 per barrel mark. Brent is up over 6% in the last 1 week and is up nearly 9% in the last 1 month. And this is because the United States has imposed sanctions on Russian oil producers. US is targeting the revenues Moscow uses to fund its war with Ukraine, and these new sanctions will disrupt Russian oil supply to top buyers including China and India. To discuss this and more, we now have Saif Mukadam, research analyst at ICICI Direct, now joining us. Saif, thank you so much for taking your time out and speaking with us here on ET Now. And first up, let's talk about crude oil. That clearly is on the boil, above $81 per barrel mark. Help us understand what led to this, and going forward, what is your outlook? If you can give us a ballpark range of where crude oil prices are headed in the short to medium term.
Sure. Hi. As we have seen, the crude oil prices have recently rallied. The major reason behind was US sanctions on Russian oil producers. This would be a temporary impact. In a short term, you can say the Brent may rise towards $85 in the short term. But overall, if you see on the long-term perspectives, we don't expect crude oil prices to sustain above 85 levels. It will correct down in the 2025. The major reasons behind this would be demand concerns from China and the surplus expected in the 2025, despite of OPEC delaying its output increases. So major reason right now in the short term is only the sanctions. And if you see the sanctions, despite of the sanctions, the OPEC has a spare capacity, a viable spare capacity, you can say, which it can prevent such kind of disruptions in the coming year. So I think the crude oil prices should correct back again in this year, and it should, like on the WTI NYMEX prices, we are expecting it to correct down till 65 to $60 again, and the resistance would be around $85.
Expect crude oil prices to correct from current levels, but as far as the global demand supply dynamics is concerned, non-OPEC plus countries are also increasing their production. How do you expect this moving factor to change going forward?
Yeah, the non-OPEC countries like US, Canada, their productions are expected to increase in this coming year. So that will also be a negative factor for the crude oil prices. And even as the Donald Trump takes the chair in the few months, and his friendly policies towards the production would be more supportive for the more increase in the oil production in the coming year. So if you see there is an expectation of surplus in this year, so that will have a negative impact on the oil prices in the coming months.
So that's as far as the oil prices and the outlook is concerned. But apart from that, let's also talk about China. They've announced a whole host of fiscal and stimulus measures for 2025. Do you expect a meaningful recovery for base metals as far as China is concerned?
In this year, we are expecting base metals to remain under pressure. The major headwinds would be the potential trade war concerns after Donald Trump takes the chair. There are expectations that he would put some tariffs on the Chinese products. And if we see in 2024, the major contributor for the Chinese recovery was in exports. So if the tariffs are increased, it will hamper its economic recovery. And even if we see the Chinese economy is facing the slowdown in consumption, domestic consumption, due to the prolonged real estate crisis and fear of deflation. So we are expecting base metals to remain under pressure. Particularly if you see the copper prices, we expect copper prices on M6 to correct back till 690 levels. That is majorly because of the surplus market is expected. The refined market is expected to remain in surplus. There will be a demand concerns from China, and the major exchanges stockpiles are elevated. So it shows the balanced supply in the market right now.
So that's the outlook when it comes to base metal. But US President Donald Trump will also be taking power anytime soon. What impact will this have on the global commodity market?
If on the global commodity market, if we see the base metals and the crude oil, as I've already said, we look into the downside because of the concerns over the trade war, the tariffs which would be put on the Chinese products, and even if the it has been imposed on the other countries, there will be a retaliation from the other countries hampering the international trades. So that will be negative for the economic growth, and the base metals and the crude oil prices looks on the downside. Whereas this would be a bit positive for the bullions, because it will be considered as a safe haven during such trade war concerns, and the demand for the safe haven would go higher.
So that's the outlook when it comes to where commodity prices are headed. Saif, thank you so much for taking your time out and speaking with us here on ET Now on a whole host of issues, especially crude oil. Shifting focus to rupee then, and rupee has broken past 86 versus dollar for the first time ever. We caught up with Lakshmi Iyer, CEO of Kotak Investment Advisors, and Upasna Bharadwaj, senior economist at Kotak Mahindra Bank, who shared their views on what the outlook is when it comes to rupee. Listen in.
I think it's a confluence of multiple factors. Definitely, the Trump factor is just one such thing. Globally, things are, on a weak footing for Asian currencies. Also is clearly acting as a very, very strong headwind. We also need to keep in mind that crude oil prices are inching up, and India is a net importer of crude oil. So I think, it's the troika of factors playing in at the same time, but there could be some more downside pressure on the currency in the very near term, and I think that will have to be managed in a very similar manner.
We are seeing significant amount of capital outflows. The FPI outflows is unrelenting, and that is keeping pressure on rupee. At the same time, what has changed really is that RBI is not keeping a tab on levels. RBI is not intervening to the levels that we have seen in the past, and that too is allowing more flexibility for rupee to move. So in all of this, clearly, with all the global headwinds that we are looking at, let me just also add that crude oil prices is another important factor. And, over the last few days, we have seen crude oil prices go significantly higher. And with additional sanctions on Russia, it does further put pressure on rupee. So all of this would weigh on rupee going forward, and dollar rupee should trend more higher, especially as RBI allows for more movement. So in this, honestly, the levels are difficult to say, but yes, we are looking at the range shifting now towards 87, 87.50. So over a period of next few months, we will see 86.5 to 87.5 range, away from the current range that we are looking at.
That's the word coming in when it comes to the Indian rupee, which continues to depreciate against the US dollar. But shifting focus to our next segment, Did You Know? And today we put the spotlight on platinum, because platinum is one of the purest precious metals rather, and it is 95% pure. 1 gram of platinum can actually stretch into 2,000-meter long wire, and it is one of the heaviest metals. 6-inch cube weighs as much as a human being. On that note, we slip into a short break, but more news and updates coming up on the other side. Don't go anywhere.